Hello, this is Phil again at the Laptop Trader channel on YouTube. Welcome back to our community. Hopefully you're having a good summer. I'm just here to share my experience and give back one video at a time. This video series is going to cover market cycles, mainly using technical analysis, trade management, risk management, and how to create confidence by putting the odds in your favor. So good luck. My email contact is laptoptraderphil@gmail.com. If you have any questions, caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for information only. Please seek qualified help if you need help investing. So our August agenda, we've got a markets pull back, indicating there's risk off, or investors are willing to take less risk than they were a month or two ago. Interest rates are falling. Why? We're going to take a look at weekly and monthly market and sector charts to try to explain that to you. This month there will be no training, so this video should be short and sweet. I will have I believe a chapter 8 video for my new investors and traders this month, but as far as our monthly market video, no real training. And then finally, what should I do as an investor or a trader during a market correction? Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So let's get to just some live charts. We're going to use barchart.com, which I think is a pretty decent service. There's a lot of charting services, but this is what I use. So this is just the different sectors, markets, and ETFs that I keep track of on a daily or weekly basis. This is Bitcoin. Even Bitcoin has had a bit of a sell-off here recently. This is quite a large sell-off Friday, over 13% just on Bitcoin alone on Friday. So if that doesn't indicate that institutions and large players are reducing their risks at this time, that's a pretty clear indication of Bitcoin. Let's take a look more at monthly charts to start. So Bitcoin has been in a bit of a pullback anyway over the last 6 months. And it's been kind of a bit of a mess where we've had a green bar, a green month, and then a red month, a green month, and then a red month with a topping tail, and then kind of this in between green month, but where prices are kind of in the middle there, and then here in August, just selling of Bitcoin. So I think that's a pretty clear chart that says institutions are trying to reduce their risk and get into more safer areas, or looking for safer investments at this time. This is the S&P 500 ETF, SPY. SPY had a nice run up, about 8 or 9 months. Made a new high last month, and now in August is selling off. So while this isn't a real big range expansion bar or a wide range bar yet, I'm kind of expecting by the end of August for this, if selling continues, this will become a wide range bar or a range expansion bar with pressure to the downside. So it may look a little bit different on a weekly chart. Let's take a look at that. Yeah, so weekly, we've had 3 weeks of selling, pretty much. Using technical analysis now, this weekly chart is technically still in an uptrend. So a pivot point would be, somewhere in this area around the 520 area. We're about 5,200 on a daily chart, or on the market index. And then the real next level of support is going to be down here around 495 to 500 using technical analysis. So this market could sell off quite a bit more. We don't know, but right now these markets are selling off. Let's take a look at the NASDAQ, ETF, QQQ. Again, on a weekly basis, market selling off over the last 3 weeks in a pretty big way. There's been a lot of selling in technology, in semiconductors, and other related areas. So that's why the NASDAQ is selling off. Let's take a look at the monthly chart on that. So monthly chart doesn't look too bad on these markets, but again, we had a new high in July, and then it closed kind of in between, and then August opened up here, and it's been pretty much selling off so far this first uh, week in August. So that's not really a good sign now. Monthly chart basically still in an uptrend, but if you want to see markets change, you need to go down in time frame. So the lower you go, you get more information. So we've got 3 straight weeks of selling on a weekly chart. If we go to a daily chart, it'll probably look a little bit worse. See how that looks worse? Where you always see changes first on a lower time frame chart, okay? And those changes will show up in the higher time frame chart. So you can see this large red bar, we made a new high, and then we had a wide range bar here in the second week of July, and then we had like a topping tail bar, in between bar, red bar, and then a gap down. And then we had selling, more selling, and then a little bit of buying, and this became a sell setup, then another gap down into this area. And now on Friday, after this area of not really tight consolidation, but prices kind of went sideways, and then we had a gap down on Friday. So these markets are definitely under pressure. And with the SPY and the Qs being under pressure, that generally signals the other markets will probably follow suit. So let's take a look at what happened with these other ones, because it's been a mixed market where the Russell 2000 ETF, symbol IWM, actually looked very positive in July, where we actually had a nice wide range green bar in July on these mid cap and small cap stocks. And then just as they get going, now we have selling in August. So it looks like the rally in these, even in the small cap stocks, is probably over. See that wide range bar on this weekly chart? So that is not good after a breakout. And the diamonds, Dow Jones ETF symbol DIA, similar picture, top and tail, inside bar, and then a wide range weekly bar there. On the monthly chart, it doesn't look too bad. We had a breakout, but now we've got kind of like a failed breakout, similar to the IWM. So while the industrials and the other small and mid cap stocks look good for a minute, now everything is kind of being sold at this time. Transports, same picture, made a new high in March, but since then has been selling off. So we'll watch out for transport stocks. And the VIX is more of an indicator, but you can see the VIX is now spiked up. It spiked up as high as about 29, closed the week at 23, over 23. So that indicates the VIX is also called the fear index. So fear is up, and it hasn't been this high since March of 23. So that's quite a long time. So we've had a nice run up in the markets, and now fear has come in the markets, and the emotion of fear can be very powerful. So let's take a look at, this is just a mid-cap ETF I watch. On a monthly basis, it was just back and forth, right? Green bar, then red bar, then green bar. We made a new high in July, and now in August, mid-caps are selling off. It look very similar on the small cap ETF, symbol SPSM. Sideways, looked like July was going to be this breakout month and hopefully a follow through in August, and so far we have not had a follow through in August. So all these major ETFs look like breakout failures or continued selling in certain sectors. Why is this happening? Let me answer that for you. So let's take a look at interest rates is the main reason why this is happening. So interest rates are starting to come down. This ETF represents 13-week treasury bills, which is a shorter term interest rate. So interest rates were pretty flat around the 5 area. Now they've started to accelerate lower because the Federal Reserve is now starting to get more aggressive with lowering interest rates because the economy is really starting to slow down. So there's problems in the underlying economy, is what is causing this fear. And when we look at this 10-year Treasury note, you can see made a monthly high back in October 23. Then interest rates came down. They crept back up to around 4.75. And the last 4 months, interest rates have been going down. And that's because, again, the economy is slowing down, which means there's going to be less borrowers or less demand to borrow money. So, and they watch all these figures and numbers at the federal level to gauge, should we raise interest rates or should we lower interest rates? Well, when they start lowering, that is generally a good sign for the stock market. Eventually, right now it's not, but it means the economy is becoming weaker. Okay, so let's just take a look now at our 11 or 12 sector ETFs, and we're going to dig in and see which sectors are stronger or weaker. Energy made a new high in April of this year, and since then has been slowly creeping down. And already in August, we've got a little bit wide range bar in energy, so energy is being sold off. Financials look good for the past 8-9 months. Made a new high in July and now selling off in August in financials. Even though this chart is technically still an uptrend, there is selling occurring in financial stocks. Consumer discretionary, or items that consumers buy that they want to buy, is now selling off in August. Okay. XLV represents healthcare, is considered a defensive sector, is now making a new high in August. It made a new high in July and now another new high in August. So this is one area institutions are moving into as a defensive play against a slowing economy. Healthcare is considered a defensive area. So that's one area to consider moving your money to if you're a trader, into healthcare ETF or into healthcare related stocks, because that just made a new high. Technology is being sold and in fact is leading this downturn in the market. Even though we made a new high in July, we are now selling off in August in a significant way. So technology is more of a risk area versus something like healthcare, which is a defensive area. XLU, utilities, also a defensive area. So you can see this 3-bar sandwich on a monthly basis, followed after this bottoming tail, we get a green, a red, and a green bar. That's where the buyers sandwich the sellers. I call that a 3-bar sandwich. And now we have a breakout upside in August. So another defensive area where money is moving into. Industrials, again, look good in July, are now just kind of selling off in August, and we're in a sideways pattern right now in industrials. That may turn around in August or September. We'll just have to wait and see on that, because this had some strength. Materials, similar picture, look good in July. So far, selling off in August, but overall, it's just a sideways consolidation over the last 6 months. And then we've got communication sector, symbol XLC. Very strong sector over the last year, year and a half. New high in July. Now starting to sell off in August. Still an uptrend on a monthly basis. But this is technology related. I would be cautious of any holdings or new investments in communications. Consumer staples has had a nice run over the last 8 or 9 months. Made a new high in July. Looks like another new higher bar here in August and approaching this high back in April of 22. So this is a sector that did not do great for almost over 2 years. But made a bottom October of 23 and since then has been accumulated. Not in a big way, but in a steady way. So consumer staples is also considered a defensive sector. So that's another area where institutions are moving their money into. And you can see the volume. So see this volume, pretty steady buying volume. Look at that spike in volume in August so far. And we're barely into the first week of August. And look at that volume coming into a defensive area. Real estate also can be considered defensive or a risky area, but somewhere in between, in my opinion. So this has been sideways for about 8 months. Had a nice July, which broke resistance over all of these candles or bars, and now looks to me like a continuation pattern where we've got a wide range bar and then a narrow range bar. This should continue to go up. As not only a defensive play, but as interest rates come down, real estate will become more appealing to investors. So I really like real estate right now, utilities, and healthcare. Those are 3 defensive areas that should provide you with some continued opportunities in the markets for the next month or 2. As far as my crystal ball goes, where will we be by the end of the year? I don't know. My guess is that if the economy holds up to any degree, I mean, there's not like mass layoffs and mass unemployment. I think by the end of the year, the overall markets will be up for the year. I think we may have a month or 2 of a significant pullback in the general market. So I would say be safe, guard your capital, use stop losses if you're a trader. Now, if you're a long-term investor in mutual funds or ETFs, the cool part is a market pullback is like a sale at the local shopping center or grocery store or whatever, wherever you do your shopping. Okay, a market, I'll say it again. If you're an investor longer term and you're putting money away in your 401k or other types of mutual fund investments, a market pullback is like a sale. It's like a buying opportunity. So if this market does pull back over the next month or 2 or 3 months or whatever, this is the time to continue your investing. And it'll really work out for you in the long term. Short term, if you're a trader and we go down to a smaller time frame, let's say you go to a daily chart, it's going to look scary, okay? And right now, so far, we've got, kind of like a leg down, another step down, and now looks like we've got like another, at least a third step down in the S&P 500. So it's going to look scary in the short term. Guard your capital, protect yourself at all times, use stop losses, don't take outsized risks for your account size. Follow some risk tools that I've taught in other videos, and I just want to make sure I covered everything I was going to cover on this agenda before I wrap up. But yeah, so I covered the markets pullback. Why? Because the economy is slowing down and interest rates are falling as a reaction to the slowing economy. We looked at weekly and monthly market and sector charts. I highlighted 3 Defensive sectors and the other sectors are definitely pulling back. Okay. So defensive sectors like healthcare, utilities, and real estate look very positive, and the other charts look weak and or in downtrends. No real training this week, but what should I do as an investor or a trader during a market correction? So yeah, we covered all that. If you guys have any questions, you can email me at laptoptraderphil@gmail.com. And again, thank you for watching, sharing, and liking. Appreciate you as subscribers, and we will see you next month. Bye, guys. Good luck.